Eric, thanks so much for being with us. We appreciate you taking the time and having a chance to talk with you today a little bit about what's going on in the industry and what we're looking ahead to at this point as well. So, thanks so much for being with us.
No problem.
From JBT's point of view, what kind of shape do you think the industry was in before, sort of leading up to the whole COVID-19 outbreak? Was there anything specific that JBT was monitoring, any trends that you were sort of keeping your eye on?
Yeah, we've actually been keeping an eye out for quite a while. The jewelry industry, as you know, took a pretty big hit in the 2008 recession that it actually never really fully recovered from. If you sort of measure basic overall sales, depending on what index you look at, the retail sales overall dropped a lot in 2008. The automotive sales dropped even more than that. And jewelry sales kind of tracked with the automotive sale drop in 2008. And then automotive sales kind of came back and retail sales never came back to the same degree. And what we've seen since 2008 is basically a continued consolidation of the industry. And that's basically across the board, whether you're talking about at the retail level where there's fewer mom and pop retail jewelry stores, all the way up into the supply chain where the various manufacturers and vendors and distributors are either going out of business or more likely they're consolidating with someone else. So there's just fewer of them around. And in general, if you sort of look at like sort of the total number of sort of traditional businesses that are out there, they're probably dropping about 5% a year, something like that in terms of numbers. The overall jewelry business, from our perspective, depending on what analytical stuff you look at, generally you see folks saying overall growing 0 to 1%, right? Although there were certain segments that were growing a lot faster than that, really kind of a stagnant industry, if you will, in terms of overall growth.
So JBT you're collecting data from your members at this point on a monthly, you're basically getting the data in on a monthly basis. So there's a little bit of a lag in terms of, your ability to look at things as they are really like right now, right this second. And I know that I saw that you had mentioned in a recent JBT report that came out a couple of weeks ago. We're recording this at the beginning of May, that, obviously the big question that you're getting right now is what's happening? What are you seeing, sort of up to the minute? Can you explain though a little bit about how that flow of data works for JBT and how you kind of put together the monthly reports, like what's involved in collecting that right now?
Yeah, the primary data flow to the Jewelers Board comes from our members who report back to us what we call trades, which are basically transactions with their customers, and then how long it takes their customers to pay, depending on what sort of terms they have with those customers. And they do that in a number of different ways, but the most common way is the members will send us periodic files that basically update that information. And the best way to kind of think of it is that happens on a monthly basis, right? So it doesn't happen on a daily basis or even a weekly basis. Basically once a month, we'll get an update. So there's a built-in lag in our information availability because we have to wait for our members to actually transact business. Then they have to record that business, and then that business gets uploaded to us on a periodic basis. So the right way to kind of think of it is there's usually a minimum of about a month lag overall in terms of updating the information from transaction level all the way to the point of where we can make sense out of it and apply it to credit ratings and things like that.
Makes sense. So you're also obviously right now monitoring, the general, not just right now, but you're also always monitoring the economic data. And that's something that is no doubt, very critical during this whole crisis. What data points or what are you monitoring right now in terms of the economy, for the jewelry retail sector, those kinds of things during this crisis?
Yeah, and unfortunately, the U.S. government doesn't really put the jewelry industry front and center, right? And it's
Right.
sort of monthly updates. It usually gets around to it, but it's always going to do retail overall. It's going to do the automotive industry. and do select other industries, construction and some other things. So we do a couple of different things in order to monitor what's going on. One is we try to find analogs that basically track pretty well historically with how the jewelry industry would change in times of change. I already mentioned probably one of the bigger ones, which is automotive. Automotive is a somewhat okay analog, mainly because it's a discretionary purchase, possibly not as discretionary as jewelry, but still, if you don't need to replace your car, you won't replace your car. And we've seen pretty good correlation. If there's a downturn in the economy, automotive and jewelry kind of go hand in hand. So we look at that because that is something the government reports on every month. But then we also look at other types of larger indexes. We will look at, for example, there's a new index that came out of the Fed called the Weekly Economic Index, which takes into account very heavily retail sales and consumer sentiment and a bunch of other things that they came out with it specifically as part of this COVID crisis that basically provides an estimate of the hit to GDP in any given quarter based upon the latest weekly information that they can find throughout the government. I believe the estimate of that was a negative 11.5% or 11.6%, which basically says if everything goes as it is, by the end of this quarter, GDP will be down by that amount.
Okay, so it's looking at it, as you said, quarterly, and then comparing it to where it was. I just going back for a second. So I'm curious, did the automotive and the jewelry industry, did that same correlation in existence back? Did you see that back during the 2008, 2009 sort of hit recession period of time?
We did. If you actually take a look at that, I don't know if you can see that, but yeah. So you can see we tracked it in the recessions, and you can see that particularly in 2008, there was a pretty big drop. Basically what you're looking at is the blue line is the overall retail sales that had happened over these two recession periods. The orange line is the automotive industry, and then the gray line is the jewelry industry. And you can see in 2008 that essentially the jewelry industry was a little bit below the automotive industry in terms of indexed against January 92. I don't know how much that means. But you can see they almost tracked perfectly in terms of decline during that time period. And then what happened was it didn't really recover that well, right? And not nearly as well as the automotive industry. And obviously a good piece of that is I don't recall anybody bailing out the jewelry industry in 2000, right? So I think that's probably part of the issue you go on there. But if you look at the very right end of the line, you can see once again, the automotive industry took a big hit, almost a straight line down. And we're making the presumption the jewelry industry probably tracks pretty good with that.
Makes sense. That's very interesting. For the people that are listening on the audio only version of this podcast, we'll have those links or have the link to these graphs on our show notes page. So don't worry. So the weekly economic index is certainly a big one. So you're still obviously, though, as you said at the beginning, and we were talking about that, recognizing that we're still in the early stages here of kind of collecting data, but we're starting to see something, and the data are starting to tell us something about what's going on sort of at this moment, not just with the economy, but in the jewelry industry. Is it telling us anything yet about some of the key, jewelry industry markers like closures, bankruptcies, consolidations at this point?
So we're going to actually have sort of a double lag there because not only do we have a lag in our data, but because of the unique situation we're in with this COVID crisis, we're going to see a lag in closures because of it for a couple of different reasons, right? One is there is some sort of, you can call it bailout funds, right, in terms of PPP and other programs that are out there. But then there's also a lag in terms of bankruptcies and closures because some courts, frankly, are closed, right? Or a business could be basically right now, it's just shut down and kind of mothballed because nobody's asking to get paid and nobody is, or maybe some people are, but other folks aren't. And so everything's kind of in a zombie status.
Yeah.
And I think it'll take a while for it to kind of shake out. You need the courts to kind of open up again, and you actually need folks to start asking to get paid, right? And then we'll have a much better sense of what's going on.
You came from outside the jewelry industry, and so I'm curious from that sort of vantage point, how does we've talked a little bit about the correlation between the automotive industry and the jewelry industry, but going more into the jewelry industry as it compares to other industries in terms of like, preparedness and its current capabilities and its potential for eventually kind of coming back from something like this, coming back from a rebound. We saw, as we were just saying, and as the graph showed, we didn't really bounce back quite as much as the automotive industry did in 2008. How does the jewelry industry compare to some of your other industries that you've been in and seen something similar happen?
Yeah, so it's, I have to tell you, it's very interesting because the jewelry industry overall, prior to the COVID crisis, as I mentioned before, was only growing at about 0 to 1%. But embedded in that growth, the online jewelry sale market was growing anywhere between 15 and 25% per year, right? Which by definition means it's cannibalizing the traditional business.
Yeah.
And, as I got familiar with the jewelry industry, it was fascinating to me because it sort of had all of the hallmarks that you would expect of sort of a classic real brick and mortar with older distribution systems industry of, there's a certain opaqueness in the market of understanding what is the real cost of something. Things tended to move, a little slower, built more on relationships. So, to me, it was more analogous to any number of industries that before the last internet bubble hit, right? So anything from, you name it, from books to whatever.
Yeah.
And then sort of later on, it's sort of analogous to, think of large scale electronics to used cars, right? That it sort of had the same kind of feeling. And the commonality you have with all of those industries I just named is they all do business online. Right. And a lot of those businesses, a lot of the folks looked at it and said, there's no way you will ever buy a used car online. Right. Or the classic one I always go to is, it wasn't that long ago when people said, there is no way you are buying a large flat screen TV online. You won't do it. You're going to have to go to the showroom to see it.
Yep. You're going to have to see it in person argument for so much of that stuff. I mean,
yeah. And now that's like, no, you just order your TV on Amazon.
Yeah.
It shows up. So
I think that leads into, that the sort of the next part of the discussion is at this point, if you're a supplier or manufacturer in the industry right now, what kind of things what kind of advice would you give somebody in that situation who's looking to sort of rebound as quickly as they can? I mean, what do they need to sort of be focused on? Is it, at this point, I just need to figure out how to sort of safely, creatively get my products moving again, get them back out the door? Sort of what do you think?
Yeah. I wouldn't at all profess to be an expert on the jewelry retail experience, right? But what I can talk about is sort of the supply chains and how to get things from one end to the other, all the way down to the retail level.
Sure.
And, from my perspective, what I've seen and observed in the jewelry market is those folks who can get a little bit out of their comfort zone are going to be a lot more successful in the long run, because what this COVID crisis has done is it has forced the entire supply chain, starting with the consumer, out of their comfort zone, right? So, a consumer that would never have thought of buying jewelry online, they're thinking about buying jewelry online now, right? That's just the way it is. And because they have to. And you see that up and down the supply chain. You see folks that have embraced the concept of drop shipping. When you're a manufacturer or a vendor, they're still doing business because they can ship, right? As opposed to having things go through a traditional supply chain. Right. So, my recommendation is start embracing those new models. Don't dream that everything's going to stay the same, because typically when these new models like online shopping and more just-in-time networks and things like that, when they start to occur, they're a one-way street, They start happening and things don't go back. I mean, people always talk about, oh, Amazon started opening up brick and mortar stores, right? Or even some of the new online jewelry guys started opening up brick and mortar stores. Yeah, but still the direction of the train is one way.
Right. And I mean, that's the thing I think that we've seen a little bit, and some of the members that we've spoken to so far, it is forcing people out of their comfort zone, and it's just at least making people review, I think, what their online offerings are and sort of what platforms they might be able to move to across all the different sort of segments of the industry. I mean, whether it's, you're just trying to build a more robust sort of e-commerce offering at this point, realizing it's your one conduit to customers at this point. Digital marketing efforts, just more email and stuff out there. You described it in a webinar that we were watching. I think it was last week or the week before. We were talking about it too. That it was sort of an increase in information velocity. Can you talk a little bit about what you meant by that? Because I think that's an important sort of thing to think about in terms of getting on this bandwagon and making these sort of changes.
Yeah, I mean,
caught up in the noise anyway is what I was.
Yeah, so what it basically means is that the information flowing both up and down the supply chain happens much faster, and there's basically more transparency to it, right? So a classic example would be right now in the traditional model of jewelry selling. A retailer sells goods. Then they buy inventory, and that inventory gets ordered from somebody further up the supply chain, and that supply chain partner goes and orders more stuff up there. And basically those sort of that sales information is inferred by these inventory purchases, right? Very common in non-jewelry industries where folks further up the supply chain actually know exactly what's going on at the retail sales level. And so that information is flowing upstream very, very quickly. And then you see the information flowing much faster downstream as well, right? In terms of availability of supply and things like that, which allows folks to better manage their inventories if they carry inventory at all.
Right.
The information about even, a vendor being much more helpful to their retailers because they can supply them all of this electronic information about their product that the retailer therefore can in turn put on their website, making it available to their end users. That's information that's flowing, right?
But so really being tapped into that or understanding what's happening is something that a business owner, I mean, in the jewelry industry right now, is you sort of need to understand the importance of that and how that flow happens, because I'm sure that it can actually, the positive side of it is with more of that information available, with being a little bit more, having more of those sort of digital tools at the ready, makes you a little bit more nimble, makes you a little bit more able to react to things. Those would seem to be the positives there anyway, for a business owner at this point.
Yeah, and then you basically also have these explosion of platforms that are coming out, right? That are basically information platforms, right? Like the diamond trading platforms, right? And those sorts of things that basically allow folks to get that information much faster. Downside, there is always a downside to things, and the downside to that is obviously the people that are downstream receiving that information can usually act on that information a lot faster as well. Which means they can move around. The competition goes up because there's just less friction to moving from one thing to another. So
then you are seeing more competition, but you're also seeing just more noise in general, and talking before about companies who are suddenly just boosting their social media presence because they have the sort of time and focus, time to spend to focus on that, and digital marketing and jumping into all of these different areas. It's also seemingly going to just sort of flood those platforms and channels.
Yeah. Yeah. And even stuff like this, what we're doing right now, webinar fatigue is going to get to be real.
There's no shortage
very soon, right? Because everybody's like, okay, I've seen enough of this. But yeah, I think what you're going to see is also, you're going to see an explosion of folks, particularly downstream, that, they didn't have an online shop, they're going to have an online shop, right? It's at a minimum, it's going to be omni-channel, and very likely it's going to be, being able to actually transact business online.
Right.
And those are going to explode, in my opinion. They're going to just be a whole bunch of them.
In terms of the talking about the supply chain and getting back to sort of JBT's one of your central missions, you've modified the JBT credit reports right now to show, at least for now, show the sort of pre and post COVID-19 ratings at this point. How long do you think that will last? Is that something where, like, what point in the future do the ratings sort of shift and merge back to just being, okay, this is your sort of single current rating?
Yeah, it'll be exactly 21 days. No, it's nobody knows.
Right.
Let me put it this way. Nobody knows what the recovery is going to look like.
Right.
What we have put in place, and I can't tell you the specifics about it, but what we have put in place, we put in some internal parameters that basically say when our internal data starts basically converging to a common point, then it'll make sense to get rid of the pre-COVID rating. Right. So in an extreme example, let's just say that, and this won't be the case, but it's an easy way to explain it, is if basically everybody's rating ended up back to where it was, then obviously we would stop the pre-COVID rating. We recognize that's probably not going to be the case. So there's a bit of thinking through what is that point, and we have a preliminary basis for doing that. But it's all going to depend on where the economy is.
Right.
And we don't know what it looks like.
Right, exactly. So, but it's something that you're ready to sort of adjust, or you have a general idea of when you'll know it when you know we're getting to that point.
Yes.
Essentially.
Yes. Yeah.
But that, I think the current, that's the other big topic right now. I think that the current and sort of future situation with credit in general, especially as it applies to the supply chain, and the relationships between retailers and manufacturers. How is that? Do you have a sense of how that sort of the credit situation now is impacting that initial relationship right now between the retailers and the suppliers and manufacturers?
There's a couple of different dimensions that are going on to that relationship right now. One is, first of all, we're in this period of where, for the most part, everybody's in a, hey, we're all in this together type thing. A lot of understanding, a lot of that forth. That won't last forever. Right? Because some folks will eventually, it's like, I got to pay the rent or I'm out or something like that. So it really depends on how long that goes. So there's that dimension of it. Another dimension of it is basically existing inventories. So obviously a jeweler is probably going to try to unload their existing inventory before they kind of work upstream and try to, sell more product that's further up the stream. But the folks that are upstream are going to want to get rid of the inventory that they have. So there's going to be some back and forth. My guess is there's going to be more, more memo, more type things of that nature. And then the other piece is that we just don't know the answer to yet is what is the impact on credit insurance, which has become a larger part of the market. It basically was something that kind of went away, or not all the way, but it certainly took a hit in 2008. Right? Insurers, just like any insurers, when a disaster happens, they kind of walk away for a while and then they come back. Yeah.
So that was starting to come back a little bit, though.
There's no question. Credit insurers were a big part of the industry, actually. Yeah. There were 3 major ones and a couple smaller ones that's how they worked, and they kind of determined who you did business with. We don't know what their next move is going to be, but if they exit, then we're not exactly sure what will happen. Does that mean that folks will be more likely to take on risk because they're no longer limited by the credit insurers? And that's the way they're going to have to do business? Or is it that they're just not going to take on any risk at all? It's very hard to say.
Right. So that is part of the risk. It could just tighten up to the point where, you have some of these manufacturers.
We believe that credit markets in general, that's just common sense. When you have a disruption like this, credit markets, barring some intervention at the federal level, they get disrupted. Right. Yeah. There's just less credit to go around. And the fourth dimension to that is, there's a lot of businesses, particularly on the upstream side, where there's a wide variety of liquidity availability to these guys, right? Some of them are running real tight, and some of them, can work through this, and it won't be so bad.
What about the idea or the greater need sort of for transparency at this point going forward? A couple people have brought up, kind of among all the different sectors, but a couple people have brought up the where blockchain sort of fits into this whole, the blockchain technology factor fits into this whole situation, and if it's going to have an impact on recovery. Do you have a thought on that or an opinion on that?
Yeah, it's not necessarily a fully optimistic one, in the sense that, blockchain obviously is already in use in the jewelry industry for tracking purposes, to a varying degree, tracking a product itself from source to destination. But obviously, blockchain has a big role in terms of cryptocurrency. And from our perspective, there probably will be an increase of blockchain and cryptocurrency, particularly in cross-border transactions, right? In terms of going from one country to another, that sort of thing, because it's a different type of risk than having to deal with currency risk or similar things such as that nature. The problem is, with cryptocurrency, you also open up a lot more avenues for fraud,
right?
Because basically untraceable.
There are those pesky downsides again.
Yes, the pesky downside. And by the way, cryptocurrency is not without its own currency fluctuations, so who knows where that all goes.
Right.
So, but it definitely, I think it'll, in the same way that it's caused some people to go out of their comfort zones, in terms of online buying and things like that. My guess is there'll be opportunities for folks to, do sort of transactions that they normally would not have done because it wasn't comfortable for them. But now, because the particular, for example, vendor is saying, hey, if you use cryptocurrency, it can be a lot less expensive for all of us.
Right.
Let's do that. My guess is it'll drive some demand for it.
So we obviously don't have a totally clear picture at all of what, hard to guess what the recovery curve is going to look like. But what, in your opinion, should people be watching for? I mean, there's probably a couple of different ways, obviously, that this could go in terms of recovery. What do you feel like people should, business owners and the industry in general, needs to keep an eye out for? Is it we're watching the shape of the curve? Is that going to sort of matter in terms of how that's going to impact the different segments of the industry?
Yeah, well, so the shape of the curve is obviously a piece of it. And in fact, I don't know if you saw it, there was a very interesting set of studies that just came out, I believe it was yesterday or the day before, that basically we now have enough data to look at the forecast models that are out there and compare them to reality and figure out, like, okay, how good were they really, right? And so the model that they're using in the government right now, the IHEC model, basically the conclusion is that it is overly optimistic in terms of the downside, the curve coming back. Whereas the London model was a little bit more realistic. It's a longer curve type thing. So, you could look at that, but I kind of follow, there's some guidance, a great writer by a guy named Thomas Pio, who basically said, we already have a time machine to look forward. And that time machine is other countries, right, that are ahead of us. So look at them and see what's happening. And, it's a mixed bag right now, right? I mean, we've had some countries that have had some declines and they're pretty persistent. And we've had some countries that had some declines and now they've had some bounce backs. And I think we need to examine what's going on there and then compare it to what the US is doing and see, how that works. Right now, I kind of think that the US is kind of in the middle. It's certainly not doing the best that the countries that really had some really good mitigation strategies and just shut it down.
Yeah.
But it's certainly not the worst either.
So we're kind of at the beginning then of that, that initial part of being able to watch where potentially the curve goes. Is there, does a slower sort of recovery, I can't imagine that it would, but just off the top of my head, does a slower sort of recovery curve benefit one section of the industry over the other at this point, or is everybody sort of,
I don't think a slow recovery curve benefits anybody.
It's going to help anybody, right?
I just don't, because there's a couple of different reasons, right? One of the things, and we hope the JBT data over time will be useful in this regard. We don't know, if you sort of think about what's going on with the economy right now is sort of the breaking of a bone, right? Or the initial injury. We don't know the internal bleeding that's actually happening underneath. And we hope the data that we have will actually provide some guidance into, okay, how bad is this really, happening underneath as we start to get that data. But a much slower recovery, in my mind, that means more uncertainty, right? They go hand in hand. More uncertainty means a slower recovery, and a slower recovery means more uncertainty. And that is never good for the credit markets. That is never good for, retail confidence levels or consumer confidence levels. It's just not good.
No, all of that just sort of trickles downstream.
Yeah, but we don't know. We don't know if this is going to be a long, slow thing, right?
No, and I think that's been the fear a little bit, just because the reality looks to be that we're going to have to sort of roll out this getting back to normal thing, in stages and in various phases. So I think that's the fear, that this is going to be drawn out, whether we sort of want it to or not. But I think, as you said, the more data points, obviously, the more data that's coming into JBT, and the more things that we're able to look at. And, there's a good point about being able to reference what's happening in other countries, what's happened in terms of them being, ahead of us in this whole process, is certainly really, really, really helpful. So I think that's about all the questions I had for you prepared. Is there anything else that you wanted to touch on before we finish?
No, I think we'll all get through this. As I said, I think if folks are willing to step out of their comfort zone, I think it's actually a great opportunity. Based on previous businesses that I've been in, one of the hardest things of transitioning to things like online models is usually that somebody has to start first and be sort of the pioneer, breaking ground on it, and they have to wait for other folks to kind of catch up. So right. You might see it like start at the retail level, and then the folks further up the chain might start playing and everything. In this case, we have this unique opportunity where everybody's on board with, we got to do this. Mm-hmm. We got to do this.
Yeah, it's definitely pushed some people off out of the nest in that regard. And I think a lot of times with this type of thing, if you're starting to experiment with more e-commerce, more digital marketing, getting more involved in social media, or jumping on these types of meetings more and more, that's something that's going to probably stick as things improve. You're going to see the benefits of them, and it's not just going to, we're going back to normal. Never mind, forget Zoom, forget what I've been doing. So it seems like a permanent change.
Yep.
Eric, I really appreciate you taking the time to talk to us today, and thank you. And we'll definitely have you back. And I'm sure this is going to be an ongoing discussion and an ongoing situation as we watch things hopefully get to the recovery curve quickly here. So thank you again for taking the time to be with us.
No problem.